What's going on, everyone? My name is D. Anthony with EvolutionTraders.com. I hope you guys all enjoyed your New Year's weekend. I hope you guys can kind of all forget about 2022, whether you were profitable in 2022, whether you were a losing trader in 2022, or whether you just had a hard and hell of a time trying to navigate 2022. 2022 was definitely not the most easiest year to kind of trade. I feel that, if you kind of manage to stay alive and stay afloat in 2022, and you kind of learn some things about yourself and your psychology and your mindset and your emotions when it comes to day trading and kind of navigating this marketplace, and you're still here. Obviously, if you're watching this video, you are still here trying to navigate these markets. You're going to do okay for yourself. Okay. Markets are never in a bear market forever, and we're obviously never in bull markets forever, right? Some of them last a little bit longer than others. It's just all about how we navigate and kind of execute on our edge, right? And your edge is going to be your trading strategy. So whatever your edge is, that's your strategy, right? So what I'm going to be kind of talking about here is the S&P 500. We closed at 382.43, and I want to be giving you guys a little bit of training, a little bit of coaching here on how to navigate these supply and demand zones and how to trade supply and demand. Just looking at the S&P 500 chart. So what I'm looking at here is the 1 hour time frame. I like to start off with the daily, kind of mark my previous day's highs and lows, kind of set those supply and demand zones. And then I kind of like to really trade off of and scalp those 1 hour candles. Now, sometimes I'm in these trades for longer than an hour. Sometimes it's just merely a few minutes, but I like to get the data off the 1 hour and the daily, and then kind of navigate my trades on the 1 hour, and then kind of manage them on the 5 minute. Okay. So from a supply and demand standpoint, where we are at in the after hours session as we closed, sitting at 383.20, 383.23. What I kind of have marked out here is that after hours data high at around 383.32, give or take a few cents. Okay, so don't quote me on the exact cent, but let's call it 383 and some change. What we are looking at here is if we do get a push higher over the 383.32, we've got about a dollar room higher. Okay, that dollar room higher is going to take us to Thursday's highs. Now, if the market is going to stretch, what we're going to want to see here, and this is how you need to, as a trader, kind of navigate your technical analysis and your execution. If we do get a 1 hour candle close over 384.36, which is Thursday's high, what we're then going to need to see is some follow through. A lot of times traders will see it break that previous day or previous couple days high. They'll get right in on that candlestick. They'll get green or become profitable extremely quickly. And then in a matter of minutes or an hour, now you're looking at a losing trade and you're in drawdown, and you're kind of wondering what the hell is going on, and you're holding a losing trade when you shouldn't be holding a losing trade. Now, I would rather lose on a trade where I know I've got confirmation and then it just didn't so happen to work in my favor. At least I understand that trade failed and I can just quickly exit, rather than kind of jumping in on that first tick and then getting completely faked out and going into drawdown extremely quickly. So what I'm looking at here is if we open up below that 383 and let's say we do start to pull back, all I'm looking for is the break over 383. Okay, so again, if we lose this level and we start to trade down, what I'm going to look for is a back test, consolidate, bounce, and I'm looking for that break over 383.32, but I'm looking to sell into my next supply zone. Okay, now a lot of times newer traders or traders that really don't understand their strategy or have a strategy, you will just get in over this breakout expecting it just to break these highs here and continuing to run, and next thing you know, it comes just shy and now it's pulled back and now you're negative and you don't know what you're doing. Have a game plan and understand where your take profit is and understand where your loss is going to be. My loss would be if we lost this low wick here. You see this low wick here that's sitting at around 382.70s. If we break this, pull back, and then close below on a 1 hour candle below this wick here of around 382.71, the trade failed and I am out of that trade, and I will wait patiently for the next setup. A lot of times you don't, and you're looking for it to bounce back or go in your favor. Why are you doing that when you could simply exit the trade? Yes, you're going to take a loss, but you have to also understand that you have an edge, right? So if you have an edge and you have a strategy, you have to continue to work the strategy. Trading, and especially day trading, is a numbers game. Now, if you don't get out of those trades when you should, you can really start to damage your P&L and your portfolio account size. And that's going to lead you to kind of spinning your wheels in the mud, losing a lot of money, and just becoming a scratch trader, right? A scratch trader is someone who kind of makes a little money, gives it all back, loses a little money, makes it all back, makes a little bit more money, they give it all back. But you're never really growing your account. You're never really taking money out of your account, or you just turn into a losing trader where you just constantly keep blowing up accounts, putting more money in and blowing up another account, going up two or three times what you started with, and then blowing it all before you're actually really taking any money out, right? So if you have a strategy, you understand technical analysis, you understand supply and demand zones, you understand this is an open marketplace, understand that your bias doesn't really mean shit. You have to understand that you are working against people that are a hell of a lot smarter than you. They're a hell of a lot smarter than myself. This game was not designed for me to just come in here and take the bull by the horns, okay? This game was designed to take money out of my pocket. So instead of allowing them to do that, I wanted to just take a small portion when they are also taking money out of those other people's pockets. That's all I'm trying to do. I hope that makes sense. Now, if we kind of look at where we stand here, if we do close, let's say, for example, we backtest and we start to lose this 20-day moving average on a 1 hour time frame, and we close below 381.55. What I would then in turn look for is the close candle below 381.55, and then I'm going to wait for the following candle to confirm those lows. That's where I'm going to take my short position, and my profit target, or where I'm going to look to take profits into, is the next demand. The next demand is going to be Friday's lows. That price is 378. If we lose Friday's lows of 378.42, what I want to see happen is 1 hour candle closes below $378.42, and I want the next hour candle to confirm those lows. And then I will be selling into my take profit close to 376.41. Does that mean I'm waiting for it to touch 376.41? Of course not. If I get my confirmation below the 378.42, the next hour candle opens up and confirms, and I take a nice short position, maybe 10, 15, 20 contracts, and that starts to go in my favor, 15, 20, 25%, I'm going to start scaling out immediately, okay? Immediately. That does not mean that I'm thinking about this market, hey, we just broke Friday's lows, we lost $378.42, the demand zone is at 376.41. I'm going to sell for $2 cheaper. No, that's not my mindset. My mindset is this is potentially a soft landing down here at 376. But as soon as this trade confirms, I'm a scalper. I'm a day trader. I'm getting in on the confirmation below 378.42. And I'm going to make 15, 20, 25%, and I'm going to start scaling out and locking in those realized gains. That's all I am doing, and that's all I am looking for on a day in and day out basis. Number one reason why is because I have an edge. I use the same strategy where I trade maybe 2 to 3 different setups each and every single day, and when those setups present themselves to me, I trust those setups enough that they allow me to be at least a 60 to 65% win rate trader. Do I win every single trade? Of course not. I'm going to lose 4 or 5 trades out of my last 10. But my losses are always a lot smaller than my wins. And my wins are more consistent than my losses. Okay? So that's one thing that I do want you to focus on. If we get and we do open up flat or we open up down, I'm looking for the long over 383.32, and I'm selling into 384.36. If by somehow, why, or reason, which does not concern me, or I do not wish to know, because it doesn't freaking matter to me, but if we open up over 384.36, that doesn't mean I'm just jumping long. Now I need to wait. I need that 1 hour candle to close over Thursday's high, and then I either need a pullback, I need some type of consolidation, or I need that next hour candle to confirm that new high, and that will be my long position. And then I will have to go back in time to kind of look at my next kind of supply zone, which is going to be closer to around that 385.72. I will set a trend line there, and I will take profits into that next level. That's what you need to understand, and that's how you need to trade. You have to understand supply and demand. Just because we open up higher or lower, just because a setup confirms, doesn't mean that we just get in and go to the beach and come back tomorrow millionaires. What it means is now it's time to go to work, and now it's time to manage that trade and practice selling those winners, selling those losers when you have those realized gains, and selling those losers when your trade setup fails you. Okay. The quicker you as a trader can start to flip the switch and rewire your brain to understanding that it's not about how much money you're going to make on the next trade, but it's about how consistent can I be with the next 100 trades? How consistent can I be at executing on my trade setups based on my edge strategy over the next 1,000 trades? Really think about that, really let that digest, really comprehend that, okay? Because I talk to a lot of traders on a day in and day out basis. The majority of them have no idea when to sell. The majority of them are greedy. The majority of them are oversized and over leveraged. The majority of them have too much inside here, meaning too much pride. They have too much bias. They have too much, assumptions. They have too many expectations as to what the market should do instead of reacting to what the market is doing. If you guys would like to trade with me, my Discord is down in the description box below. If you guys would like access to some of my strategies and the way that I trade and kind of learn that and trade with me personally, this year in 2023, I'm getting a lot more into the psychology and understanding why it is that traders are doing what they're doing and trying to help people be a lot more consistent. If you would like to get a part of that and kind of really open up the mechanics as to what's going on inside here to be able to allow you to be more profitable, definitely become a lifetime member. Go to evolutiontraders.com, become a lifetime member. You're going to have access to the courses for life. You're going to have access to the community for life. And as long as I am trading and as long as I'm in this business, and I've been in this business for over 7 years, as long as I am here, you will have access to myself. And we can deep dive 1 hour sessions a week, 30-minute sessions a week where I can actually talk to you live over the phone or through Discord voice, and we can talk about the psychology. Why did you not sell this winning trade at 27% and allowed it to come back on you and break even? Why did you not sell this losing trade at 22% when technically, you were stopped out, but you held it for a 50% loser? Why did you not why did you overtrade? Why were you trying to have such an emotional bias as to what you thought the market was going to do versus reacting to what the market is doing? We can really start to understand those issues and those problems that you have together, okay? Because I've seen, heard, and been through it enough to understand. Okay, so again, my name is D. Anthony with evolutiontraders.com. I look forward to working with all of you guys in 2023. Look forward to working with more profitable traders and getting everyone as consistent as profitable as possible. Do 80 to 90% of day traders fail? 100%. And the reason that they fail is because first, they don't understand technical analysis, and two, they don't understand their psychology and they don't understand their emotions. The faster we can cut that in half to where you can understand those things and know how to react to those situations, we can get you to be a more consistent and profitable trader.